Hi, my name is Serge Berger, and I'm happy to announce that Roboforex has reached out to me to help them teach you, the Roboforex clients, on how to trade stocks, indices, and exchange-traded funds.
Okay, hi everyone. It's Serge Berger here for our second webinar in this series. Before I get started, though, I want to do a quick audio and video check. If you can hear me and you can see the screen, if you could quickly type in a yes or something like that, that would be great. All right, excellent. Okay, perfect. Thank you, guys. So what we're going to talk about today is a little bit more about how we can find the best possible stocks to trade. And when I mean finding the best possible stocks, what I'm really talking about is which types of stocks should we look for first and foremost. We will talk about scanning for stocks in another topic, in another video. But for right now, since we are still in the introductory series, parts of our video series, let us keep it very straightforward and just kind of focus on which types of stocks we want to focus on. And then what we'll do, we're going to look at some stocks that are currently looking interesting, and we'll apply some basic technical analysis on that using the Roboforex platform, so that you get a better idea of what we're talking about in real time. Also, if you have questions, I would welcome you to ask them at any given point, and we will make sure I will answer them as we go through the presentation. So that's what we're going to talk about today, is the best stocks to trade. Which one are the best stocks to trade? I'm going to quickly review a couple of things that we discussed last time in the first webinar of this webinar series. And so as a bit of a refresher, so why trade US stocks in general? Let me just go through a couple of slides just as a refresher of what we talked about just a couple of days ago. Number one, you know a lot of the companies. Unlike other stock exchanges in the world, there is a decent likelihood that you are using at least some of the products of some of the major companies. You may have eaten a hamburger at McDonald's before. You may be using Facebook, and maybe you're even using an iPhone or something like that. So that makes it a lot easier to trade stocks that you are somewhat familiar with the products at least. So that's number one. Number two, we talked about the sheer size of the US stock market. If you look at it in terms of its weight in the MSCI World Index, we are looking at about a little bit more than a 60% weighing that US stocks have in that entire cake of developed countries. If you compare that to other countries in there, like Japan and the United Kingdom, you can see there 60% is towering much above all these other countries. So there's a lot of stocks trading in the US stock market, and makes it very large, and it's also very liquid, and it's actually sort of goes vice versa. Another thing we talked about last time in the first webinar was the transparency and the accountability. So many of these stocks, many of the largest, most well-known, and most financially sound companies, and this last part here is maybe most important, the most financially sound companies trade on the US stock exchanges. Part of the reason why they trade there is for accessibility purposes, because they know a lot of people, the US stock market, so they want to be listed there. They also like to be listed there for the strict accounting standards, the strict rules for having to report their earnings. All of that gives you credibility as a company, and so companies sort of put that on themselves to be listed on the US stock exchange. Strict oversight as well on the exchanges. So all these things give you a lot of transparency and accountability for the US stock market. Liquidity is something we touched on a little bit last time. We're going to talk about a lot more today. The New York Stock Exchange is by far the world's largest stock exchange. 3 to 4 billion shares traded there each and every day. That is a lot of liquidity to be able to go in and out of trades. That means you have a very close bid and ask, or bid and offer, depending on how you like to use those words. So a very tight bid offer spread is very good for buying and selling. So for example, let me quickly just bring down the Roboforex platform, and you can see you can trade. It's a penny wide offer. This is the IW. This is an ETF, an exchange traded fund. But of course, we could also look at a stock. So let's look at, for example, Apple stock. Type that in here correctly. All right, you see it comes up very nicely. You can see that's a penny wide offer. So the sell, you can sell at $225.27. You can buy $225.28. That works in most sizes, just about as large as you can possibly consider, unless you're a large institution where you have to do block trades, which is a little bit differently. But for the most part, for us retail traders, the U.S. markets are extremely liquid. They're liquid for everyone, but the penny-wide stocks, you can see now it's 31 offered, and so that's very, very good to have that liquidity. Now, again, there are multiple exchanges in the United States. The New York Stock Exchange, we have the NASDAQ Composite, and there's others as well, but these are the major ones. The New York Stock Exchange being one of the major physical exchange, aside from some of the futures exchanges in Chicago. And of course, there is the NASDAQ, which is more of a virtual exchange, like a lot of exchanges are acting right now. Let's talk about what we are today for, and that is the topic today, which is the best stocks to trade. Before we talk about any of this, we need to understand a very basic principle called market capitalization. How many of you are familiar with that terminology, market capitalization? Anyone familiar with that? It's something that's not really common in the foreign exchange world. It's much different there. But when we talk about market capitalization, we are looking at the dollar value of a company's outstanding shares. That's basically the simplest way to explain what that is. It's another way of saying that a stock is either very big and a lot of times has a lot of volume because of that too. So the calculation is very simple. What you do is you take the stock price of any given stock and multiply it by the outstanding shares. So for example, if there's a stock that's trading at $2 per share, we would multiply that by the number of outstanding shares. In this case, I used an example of 10 million, right? So that gives you a market capitalization of 20 million shares. Apple, for example, has a market capitalization, the last time I checked, of closer to 600 billion, something like that. I'm going to quickly have a look at this for you right now, actually, just double check. But the market capitalization is an important concept to understand because it also has to do with finding the best possible stocks to trade first and foremost as a primary filter. To me, that's an important thing. Yeah, so you can see, I'll quickly show you this here. This is the Bloomberg.com website. You can see the market capitalization is $620 billion. That is big. So, of course, Apple is the largest stock in the world, but still, you get the idea. So, this is a key starting point when we start looking at stocks. Is market capitalization, because the larger market capitalization is, the more you can be sure that there's actually good liquidity in that stock. So let's move on and start categorizing the stocks a little bit. Last week we touched, or in the first webinar, we touched on categorizing the stock market a little bit by looking at different sectors, by looking at different groups, industry groups. But what we can also break down the stock market by its capitalization. And for purposes of today's presentation, which is to find the very best stocks possible to focus on for trading, let's focus on categorizing by capitalization. So large capitalization stocks, so stocks like Apple, for example, also known as blue chip stocks, they tend to be larger than $5 billion in market capitalization. Mid capitalization stocks are somewhere between large and small cap capitalization. So to give you perspective on that, small capitalization stocks are somewhere between 300 million and about 2 billion in market cap. These are small capitalization stocks. Now we're breaking these the US stock market down by these so you have a bit of an idea of where to possibly find the best stocks. In my opinion, and this is a personal opinion, the best stocks to trade are usually found in the large and mid cap space. You might find some small capitalization stocks, but trading small capitalization stocks can be very, very tricky, and I will show you why in a little bit later on in the presentation. Okay, a lot of people like to trade small capitalization stocks because they get a lot more leverage. Penny stocks trading, for 50 cents or $1. It's not impossible to trade those stocks, but it's very difficult. And I would prefer anyone that starts trading the stock market and actually always focus on the large capitalization and the mid capitalization stocks. Okay, so this is just another way of breaking down the US stock market into some different pockets. If we now look at this categorization of different capitalization in a slightly different way, it looks like this. We talk about the blue chips. Again, that's mostly your large cap stock. It's the largest of the large cap stocks. The blue chip stocks tend to be something that you see in the Dow Jones Industrial Average, which I'm going to quickly show you right now. The Dow Jones Industrial Average actually has an exchange traded fund that you can trade. If anyone here would like to trade the Dow Jones Industrial Average, okay, which is 30 stocks, it's 30 blue chip stock as they call them, you can do that using the ETF or exchange traded fund with the ticker symbol DIA. All you have to do is go into the Roboforex platform and type in DIA. Okay, so very simple as far as that is concerned. In fact, let me quickly minimize this so we can focus more on this. So this is the DIA. If you would like to trade the 30 largest or 30 of the largest stocks in the United States, the blue chips, this is a good way of trading it using the DIA. So this is sort of a shortcut, if you will, to trade at least some large cap stocks. Now we can also look at the US stock market, or any stock market for that matter, by breaking it down into growth stocks. These tend to be stocks like, let's call it maybe Google, Amazon.com, names like that. Value stocks could be anything really that is considered to be undervalued, maybe an industrial stock, maybe like a Caterpillar, which makes machinery for building stuff, right? Like diggers and machines like that. And then lastly, the US stock market also has a lot of penny stocks. So I'm just trying to show you all the types of stocks that are available on the US stock market. Now there's other types of things available, of course, as well. There are mutual funds that you can trade day to day. There are various notes like A shares and B shares and all sorts of other things out there that you could focus on. But in my opinion, of having done this for nearly 20 years, I think that the best way to trade the US stock market is really by looking at your large and mid capitalization stocks. Now we have a question here. ABC XYZ is asking, what is a mutual fund? A mutual fund is basically essentially just a fund that a fund manager manages, and you can trade that fund. You can think of it like an exchange traded fund, okay? And if there's enough interest, we can do a separate webinar just on exchange traded funds, if you like, or mutual funds. The concept is very similar. Like, for example, Dow Jones Industrial Average, you could almost consider it a little bit like an index, but an index that has been actively managed, if you will, by a trader, by a manager of that fund, right? So it's like a portfolio that someone is managing, and it's publicly available for other people to invest in. Okay. Now, mutual funds are better not to be traded. In my opinion, they're better to be invested in, which is why the exchange traded funds are really, really good. So the ETFs, as they're known, which is there are ETFs on different sectors. There are ETFs on major indices like the Dow Jones Industrial Average, and we touched on those in the first webinar, and we will talk about this much more going forward as well, of course. So those are just some of the instruments here available for you in the U.S. stock market, and I think some of the very best tools out there are exchange traded funds. Again, there are many of the big ones are available to trade. In fact, I think everything you need is available on the Roboforex platform. So you can just go in there and type in the ticker symbols and start trading those. In fact, I will probably give you a list at some point of some of the most liquid and best exchange traded funds that you can trade as well. So we can do that at some point. But let's continue along in this and narrow it down a little bit more. So now we've talked about sort of the big picture, which is growth stocks and value stocks and blue chips and penny stocks. And again, I would not encourage anyone to trade penny stocks ever, really. But they're just very difficult. We can talk about it a little bit later on. So I would really focus on your large and mid-cap stocks and maybe some small capitalization stocks that have a lot of liquidity and a lot of good reputation. So let's narrow it down and start looking at some sectors and industry groups that might be out there for us to trade. Well, again, this is a personal opinion, but I like to trade stocks that actually do something, right? So you might be able to look at a stock like, let's see, like for example, something that's very boring, like Walmart, for example. I don't know if anyone here is familiar with Walmart. Walmart is actually the world's largest retailer, and you can see the stock. It does stuff. It's okay, but it's not very volatile, and that can be good and bad. But I think there are better stocks to trade. Okay, so for me, for example, instead of trading something like Walmart, I prefer to trade stocks that actually move a little bit more. For example, I like to trade stocks like for example, some of the banking stocks, like Bank of America, for example. Just to give you a little bit of an idea, you can see a stock tends to move quite a bit more, right? So just to give you a bit of an idea of the difference between some stocks and others, there are stocks to stay away from for purposes of liquidity, for reasons of liquidity, lack of liquidity, for reasons such as not being, having various issues with them. I'll talk about in just 1 minute. But of course, if a stock is very boring and doesn't do anything, then it's usually best to stay away. Like for example, a lot of people don't like to trade utility stocks. These are like your electric utilities. They are represented in the US stock market using the XLU exchange traded fund ticker. So the XLU you would type in here, and they've actually been very nice performers over many years. But if you were to look at them on a day-to-day basis, they are not very attractive, or not very sexy, if you will, to trade. So that's usually something I personally like to stay away from. But interesting stocks to me in general are a lot of technology stocks are usually very interesting. Semiconductor stocks like Intel or Nvidia, or anything internet related with enough volume, right? Amazon.com, any social media stock that has good volume, Facebook. What else is there? LinkedIn, for example. These are all stocks that are in the news, they move enough and necessary regulatory approvals and everything that you need to know in order to trust that stock to not be completely falling apart immediately. We talked about financial stocks. Banking stocks are in my opinion, very, very good to follow. Again, I would follow on the big stocks here. I would follow things like Bank of America, Citigroup, JPMorgan, of course, my former alma mater, which means I used to work at JPMorgan. Wells Fargo, Citigroup, Goldman Sachs. These are all, in my opinion, good stocks to trade because they are sensitive to the economic developments. They are sensitive to interest rate movements. They are sensitive to their own news flow. So this is all good stuff to have in a stock because it means it moves enough and maybe not too much, because also all the banking stocks also have a lot of institutional ownership. And institutional ownership can actually be very good. A lot of people think that if a stock is being owned by lots of big institutional investors, that it's very boring. But that's not necessarily the case. A lot of institutional investors do plenty of trading, so that allows for a lot of liquidity, and also it just allows for somewhat more trustability in any given stock. So the banking stocks are good. And then you can look at trending stocks, stocks that are maybe in the news a little bit, like a GoPro or Fitbit. These are trending stocks that tend to be in the news. Sometimes they're boring, sometimes they're more interesting. So that's another type of stock you can look at. And then consumer-oriented stocks, I think, are very good. These are a lot of the names that you know. For example, McDonald's, maybe some other restaurants. Maybe retailers like again, maybe like an Amazon.com, just names that you know that you use on a daily basis, products of. These are all good stocks to trade because again, they have enough liquidity, they have there's enough trustworthiness around them, and orderly news flow, and they tend to trade well through a technical lens, which is something we are going to talk about here much more in just a minute. Now, stocks in the news is a very big topic, and I want to talk about this to the most extent possible right now without taking too much time. Stocks in the news is stocks that give us news on any given day or week, right? So for the US stock market, these are some good websites here. You can go to marketwatch.com, for example. In my opinion, that's a very good website for news from the US stock market. So for example, if we go to that website, right, that's just to quickly show you. Let me just quickly show you. And this is not an advertisement for that website. This is just to show you a little bit of an idea. So if you were to go here, for example, you can see news updates. You can type in a ticker symbol for a stock. Let's look at, for example, Apple, right? And we should be able to get some news here on this stock. You can see market news on Apple. All these kind of things are important. So when a stock is in the news, and you can see which stocks are in the news by just going to the main website, and if a stock is in the news, it tends to show up somewhere up here in the main page. So this is a very good website. Bloomberg.com, also a good website to look for stocks in the news. Stocks in the news, or S&P 500 movers as well. You can look at movers like, for example, right, you can see this stock here, First Solar, FSLR, is up about 5%. So let's look at that real quick here on the Roboforex platform, just to kind of show you how I would do this in real time. All right, so I typed in First Solar into the Roboforex ticker up here, and you can see First Solar is moving here. This is the chart of First Solar. So that's how you would look at do the research, if you will, you would go in and you would find the news on a website like marketwatch.com, and then you would go in to your ticker symbol in your Roboforex platform and look for what the stock might be doing or executing a trade, and so on and so forth. Okay. All right. So let's continue with this here. So having a news website, in my opinion, is very important. And I think these are some good websites here. Again, there's many other websites out there like that, but I do think these two are pretty good. Okay. Now, I made a little bit of a checklist for you to keep things very simple and straightforward. And I believe that liquidity, first and foremost, is the most important. So when you're looking at a stock, I think you need to make sure it has enough liquidity. Number two, it's usually good to have some sort of news flow. Okay. In other words, that the company is somehow in the news, whether it's good or bad. But it's usually good to have some sort of news flow. Not too much. In other words, you don't want to have a company in the news of pending lawsuits or mergers or major product announcements. Those are not good things to necessarily be having taking place at any given point, because they can move the stock very quickly in any given point, in any given direction, and without you being able to react. So you want to have some normal news flow, like for example, Apple iPhone sales are going well, or Apple is announcing a new charity program or something not major in a sense that is going to move the stock. Now, also, we want to make sure stocks are technically sound, and we will talk about this much more in just a minute. It's important to look at things like how does the stock react to important moving averages and trend lines. You don't want to see stocks that have erratic behavior, right? You prefer to have a stock that has some sort of orderly behavior. That's really, really important, because if the stock is just jumping all over the place, then that's usually not a good sign of an orderly stock. Now, let's talk about some of the worst stocks to trade. We've talked about, the best stocks to trade, and we're going to spend a lot of time now looking at charts over the next 25, 30 minutes or so. But before we get to that, let's talk about the worst stocks to trade. Well, it's basically the opposite of what we just saw on this checklist right here. I think some of the worst stocks to trade are ones that are not liquid. So liquidity is, again, like I said before, number one importance. You don't want to trade stocks that have erratic behavior, like I said. You don't want to trade stocks that are involved in major lawsuits or in major accounting irregularities, or stocks that are about to be taken over, things like that. You don't want to trade. You don't want to trade those kind of stocks. You also don't want to trade stocks that have no respect for technical analysis. That's just makes life much more difficult if you trade stocks that have no respect for price action. And by the same token, you don't want to trade stocks that have a tendency for random big up or down gaps at any given point. Okay, so that is to say that if you have a stock that every single morning it either opens up 1% or opens down 1%, or even more, or 2 or 3%, that's not a good stock to trade, because it doesn't give you a lot of trustworthiness. It doesn't really allow for you to be able to flow in and out of the stock orderly. So I would stay away from stocks that have this tendency to jump around too much, because again, the whole point is being able to have high probability trades that you can use, among other things, technical analysis on. And in order to use that type of analysis properly, you you need to be able to be able to trust the price action. So so that's really important that we have an orderly news flow. All right. Okay. So let's talk a little bit more about liquidity just for a minute before we look at some charts, and so we can apply, and I can show you what, in my opinion, a good stock to trade looks like. Well, liquidity means that I think we should focus on stocks that have a volume of about 500,000 or more shares traded per day. So daily volume should probably not be much less than 500,000 shares. Again, this is my personal opinion. That's not to say that you cannot trade stocks that have less than 500,000 shares traded, but I do think good stocks, more often than not, or more trustworthy stocks with more orderly flow and more and that react better on the charts tend to have at least 500,000 shares traded per day. That's a lot of volume that you might think, but in the US stock market, 500,000 shares traded is actually not so much if you look at your average mid and large cap stock, and even plenty of small capitalization stocks. Okay, so let me see here. Let me just quickly, guys, can you still hear me? I just want to make sure if you can still hear me. I'm seeing a little bit of a time lag here. Yeah, we're good. Okay, good. Sorry about that. I thought that maybe the chart wasn't moving. Anyway, so now what I'd like to do now is try to show you a few stocks, and these are not suggestions, but these are just stocks that I think make sense to trade because, as you'll see in a minute, they have orderly flow to them. Now, let's take down our Roboforex platform and make this a little bit larger so you can follow this along, and let's type in, for example, let's just go back to Apple. Is anyone in here interested in trading Apple ever? Would that be a stock that you would be interested in trading? So Apple, you can see, we're going to be doing much more technical analysis in a future webinar. In fact, we have an entire series of webinars scheduled for technical analysis. But let me just show you a little bit what a good stock to trade, in this case Apple, looks like from a technical perspective, and why this is an orderly stock. Well, number one, you can see, yes, the stock sometimes gaps up or down. For example, here it gapped lower, here it gapped lower, right? Here it gapped lower, here it gapped higher. But all in all, this is not a lot of gaps. There are many stocks that are much worse at gapping up and down, and so a stock like Apple, because of its liquidity, because of its worldwide participants, is a very good stock to trade, and an orderly one in that sense. So that just quickly brings me back to a point I made before. One of the big attractions to the US stock market is that the whole world participates in the stock market. Everyone can trade US stocks through some platform, or at least most people that I'm aware of. So you can't, for example, there's some shares in the world, some stock markets that are not accessible to foreign players. But because the US stock market, for the most part, in some shape or another, is actually accessible to everyone, or most everyone, it just offers you a lot of opportunity, both from a liquidity perspective and also from a technical perspective. In other words, that the stock moves enough. So let's look at Apple here, and we're just going to apply some very basic technical analysis. And you'll see how I use moving averages in the same color all the time. So my 200-day moving average is this red line here that you can see. Okay, that's your red line. And then you have a 50-day moving average here, just for reference purposes, which is the yellow line. That's this line here that trades much closer to the price action. Now, again, we will be focusing much more on technical analysis going forward in other webinars, but I do want to show you a little bit what it means to be an orderly stock, and in my opinion, a good stock to trade. Well, you can see Apple. Let's just start with a basic and focus around the 200-day moving average. Again, that's the red line. You can see when Apple started holding the 200-day moving average as support back here, it always bounced off that moving average, and then it had rallied, and then when it actually broke back below the 200-day moving average, it retested it, and then it stayed below the moving average for some time. Then it broke back above it, found it as support, and it rallied again all the way back to here. Then when it broke back below, it stayed below for a lengthy period of time. It found it as resistance several times until it finally moved back above the 200-day moving average. It found it as support, and again it rallied. So that is what I consider to be not only an orderly stock, but just generally a stock that has a lot of trustability. Because the thing about stocks is that every single stock has a different personality. Just like you and I, everyone has a different personality. We have good days and we have bad days, right? Which is in addition to our different personalities. So it's the same thing with stocks, and that's why I want you to that's why I'm giving you this example, because stocks have different personalities depending on the type of industry that they're in, but they also have good or bad days, right? Depending on the news flow. So, I like to have a stock. I prefer to have a stock that is not schizophrenic. In other words, a stock that doesn't have multiple personalities, but a stock that has one personality, which is to say that it trades orderly for most of the time. So this is a very good stock to trade, Apple, just because of that. Now, yes, I will do that in the next session, ABC, to compare it to another stock. Well, let's look at the S&P 500 itself in 1 minute, okay? ABC XYZ wants to look at the S&P 500 here. Well, let's look at the S&P in 1 minute. Let me just focus a little bit more on Apple so you can see what I'm talking about. Also, Apple, we're just going to use some very basic trend line tools, which, by the way, I don't know if you're already using this tool, but the Roboforex platform offers some very straightforward charting tools. All you have to do is click here and you get your trend line, okay? And so, for example, what I like to do is draw some very simple trend lines like this, just to kind of get an idea of what. Actually, let's draw a channel here. Let's do this. All right. So you can see Apple also has this thing that when it breaks below a channel, it tends to stay below a channel and it starts moving somewhere else, right? Just like here, when Apple, let me activate this. When Apple broke out of this channel, let me move that down. You can see here, when Apple broke out of this channel, it started moving into a new channel, okay? So this is what I call an orderly stock, okay? And a good stock to trade because it has a rhythm to it. Now that rhythm changes. That rhythm sometimes is fast, sometimes it's slow, but there is rhythm to it, and that's why that's a good stock. Now let's look at the S&P 500 as a comparison. We looked at the S&P 500 a little bit last time, and the S&P 500 is also very, very, very good to trade. These are actually some of the trend lines that I marked in last time in the first presentation. But you can see the S&P 500. If we just look back over the past, let's call it 9 or 10 years or so, you can see there's an orderly flow, right? There was a lot of upward movement, okay, so in the bigger sense. So that's looks something like this. Let me just do this one more time here, like this. All right, so this is your basic upslope, and then what happened is that the S&P 500 actually fell into a big picture sideways range, okay, and now it's possible that the S&P 500 may be moving into a new upward range, right? So this is what we refer to as, again, a stock that has some sort of a rhythm. You can see there's an uptrend, then it was very, very choppy for, let's call it from about mid 2015 or early 2015 all the way into just this past summer, in this past July when the stock market broke higher. Okay, so again, there's a rhythm to here. There are trends, there are sideways movements, and then there are trends, and there are downward trends as well, of course. Okay, so do you see how that works, ABC? I mean, that was a really good question on your part. So want to make sure. Does that make sense to you? Okay, perfect. Yeah. All right. Good. Let's delete this stuff. Excellent. Okay, so let's actually stay with the S&P 500 so you get a little bit of an idea here, and we'll show you more stocks here in just a minute. But you can look at something like the S&P 500 and also see another really good characteristic of an orderly stock. In this case, it's an index. It's the SPY exchange traded fund. Is this kind of stuff down here. You can see these very strong, what I call bullish reversals, right? These are, in my opinion, signs of good stocks. You know, when they have strong bullish reversal and also orderly topping patterns, right? So you can see these kinds of strong bullish reversals that you can trade. Not every stock has that. A lot of stocks are a lot more volatile, and also in the top end you can see like the S&P 500 here has well-defined topping processes that take time, which is exactly what you want to see. Okay, so these are all signs of good and orderly stock to trade. Okay, now let's look at a stock that is okay. Yeah, so ABC wants to know what are the moving averages. So, and again, keep in mind that we are going to be doing several webinars just on technical analysis very soon in this webinar series. But just so you know, in this example, the 200-day moving average is this red line. The yellow moving average is the 50-day moving average. So it's 50-day and 200-day. And as a little bit of a preview, I will tell you that I said before that every stock has a little bit of a different personality, and they have good days and bad days. But also, as because of that, every stock tends to react a little bit differently to its two different moving averages. So, for example, the S&P 500 actually does not act well to its 50-day moving average, right? That's this yellow line. But it does respect fairly well its 200-day moving average. But then there are stocks like Apple, for example. Let me just show you this. Okay. And you can see Apple respects its 200-day moving average very well. It respects its 50-day moving average as well. A little bit less good, but it still respects it better, probably better than the S&P 500 does, right? So let's look at a few more stocks here in the 10-15 minutes we have left here. And let's look at, for example, something like Google. Or, well, let's look at something else. Let's look at something like Amazon.com. Ticker symbol AMZN. I hope you guys are familiar with Amazon.com. It's a huge online retailer. And you can see, if you look at Amazon.com, there are orderly trends. In this case, now over the past number of years, stock has mostly trended higher. But another big, in my opinion, important another good attribution of a good stock to trade is a stock that corrects from time to time in either direction. So, for example, let's apply the same analysis and look at, for example, this. So you can see. Oops, that's the wrong one. Let's see here, which is the one I wanted to take. This. So let me delete this quickly, and you can see the Roboforex platform here is very simple to use. Doesn't really take a whole lot of practice, so that's always good when you have that. So let me just draw a quick channel here so you can see what I'm talking about. All right, and it roughly looks like this. Okay, so this was your basic price movement over this time period, right? You can see most of the time the stock spent time within this. When it rallied too much, it came back into the channel. What's important to me for stocks that are good to trade, or stocks that from time to time correct about 20 to 40%. That sounds like a lot, but every once in a while, in my opinion, a good stock has to do that. Okay, so for example, Amazon.com corrected about, I believe this was the, oops, let me quickly move this over. This was the correction in January, right? Or, yes, let's see here. Yeah, that was the January correction, and that correction was about 30%. Okay, so it's important that a stock, whether it's trending higher, like this one did, or trending lower, it's important that it corrects, every once in a while, maybe once a year or every other year, that it has a real washout. If the trend is lower, that maybe it's good that it has a big rally every once in a while, and then it resumes the trend lower. The reason why that's important and why that's a good stock is because it kind of resets the stock, right? So in the case of Amazon.com, which continues to be a growth stock and has continued to be a growth stock, you can see that this really reset the chart. And what happens is because here's what happens. So you can see that Amazon.com traded very nicely, right, for this period. And then all of a sudden, it started doing this stuff up here. And that was because there were too many traders were involved. And these traders were basically pushing the stock higher to the point where institutional investors were no longer interested in buying the stock, right? So then the stock needed to correct 30% because what it needed to do is to wash out some of these small players. Maybe these were day traders or just retail traders that were just clueless and just wanted to trade the stock higher because for no reason really. So then once the stock dropped 30%, all these players that were buying up here, they were all washed out. And that was then once again an opportunity to start buying a stock like this. So the reset, these sort of washouts are important. And if you look at Apple again, let's quickly go back to Apple. You can see that Apple too does this every once in a while. We had a nice correction here. We had a nice correction here, right? And now it looks like we may be potentially back on a new swing to the upside, right? So if you look at Apple right now, let's again draw some very simple channels. Looks something like this, and we've got a potential new trend to the upside. So these washout periods that can last anywhere from 1 to 4 or 5 or more months. These are very important in my opinion to have plays. Does that make sense, folks? This is a really important point here, that you want to make sure that trading stocks that they have these washout periods, because again, what it does, it kind of cleanses the palate and it makes them once again tradable. Same thing for Facebook, for example. Let me show you Facebook. Facebook is a great stock. It's in the news a lot. It has lots of liquidity, right? It is, again, it's a U.S. stock, so it's very much regulated in that sense. And you can see even Facebook had the same thing happen to it earlier this year. You can see that Facebook in a big sense. Let me just quickly draw the big picture channel here. It looks something like this. Okay, that's your big picture channel. And this summer, the stock started getting very overbought. Here, you can see the stock was very overbought and it just couldn't go anywhere anymore. Well, finally, it washed out, and that was, very good to see, because basically what it allowed us to do. Oops, what did I do here? Let's see. Sorry guys, I just messed something up. Give me 1 minute here. Okay. All right. So you can see what happened is Facebook stopped going up. It couldn't go much higher anymore because a lot of people, everyone was bullish, all the small traders. And so now that we've had a washout back to the lower end of channel, we now may once again be able to see institutional investors buying the stock for another push higher, unless of course it breaks below support, in which case the stock would be done. But I'm hopeful that's not going to happen just yet. Okay. So all very important attributes of stocks that trade well. Now, also let's give you one more example here of another good quality of a good stock to trade. Is a stock that doesn't rally or fall apart too much every time it has earnings. Okay, so actually we can stay with Facebook just as an idea, and you can pretty much see where Facebook reported earnings. It reported earnings here when it gapped higher, and I believe it reported earnings again probably here, and I know it reported earnings here. Now these are big gaps, right, in the stock, because earnings came out, so the stock in this case gapped higher, here gapped lower, here gapped higher. But it didn't completely mess up the chart. Like, for example, let me show you a stock that in my opinion is actually very difficult to trade. It's called Lululemon Athletica. They make like athletic sportswear. Okay. Now, this stock tends to have some really big gaps after its earning results, and you can see where these earning results are. Every time the volume spikes here, it's big earnings announcement, the stock gapped higher. Here it didn't really do a whole lot, and he fell hard. These are really, really big earnings gaps. So when stocks have earnings gaps that are too big, I think they become very difficult to trade because you can't really trust it anymore. So I would prefer to trade stocks that have a more orderly flow to them. Also, stocks that are going sideways. Okay, that's another big thing. Stocks that are going sideways, in my opinion, are not good to trade. So if you look at a stock like Lululemon at this point in time, this was not a good stock to trade. It was stuck in range. Now, yes, you can trade this range, which is to say you can sell it here and buy it again at the lower end of the range and sell it and buy it. But trading the range is, in my opinion, a very difficult thing to do. There is one method of by which I do it. I will show you that in a later webinar. But you never really know when the breakout is out until it's very clear. For example, you could have said that the breakout here, the stock here was going to break out of the range, but then it didn't. Right? You had a very strong reversal, so you have to be very agile, and so that. A lot of times it's very difficult psychologically for people to do. So stay away from stocks that are range bound. Every stock can go sideways sometimes. Like you can see Lululemon, actually in this case, this stock, sometimes it's a very good stock to trade, but other times it's just very boring. And then sometimes it has really big earnings gaps, which is it's not good to. So what I'm telling you is that I want you to think of stocks more like in terms of their personality. Lululemon was a nice trending stock here for some time. He was a nice trending stock here, but the personality, while the personality may stay the same, they have minor changes in well, in this case, actually, I would argue Lululemon actually changed its personality here because this is now very, very choppy. So it's not a stock you want to be focusing on anymore. So focus on stocks that behave well. Last but not least, focus on stocks that behave well technically. Again, we're going to do extensive technical analysis in the future webinars, but for example, a stock that, in my opinion, acts well technically is a stock called AMZN. This is a biotechnology stock. And it may not look like much right now here because you can see the stock is largely stuck in a big picture sideways range, but it does act very well technically. I'll give you a real quick example of this. So number one, it reacts well technically because it has these very strong bullish and bearish reversals. So when the stock gets tired, it's very clear. It's very visually clear. when the stock gets tired on the downside, it becomes very clear. Okay, and this is some of the best trades that you can do is when it's very clear to you when a stock gets tired up here or tired down here. So that's why I say a stock like AMZN is technically very sound to trade because of that. Also, it's a stock that has nice follow through. So when it does start to rally, it usually sustains that rally for quite a bit of time. Until it gets to a resistance point. So all in all, you want to focus on stocks that act well. Technically, we talked about before Apple, being a stock that acts well technically as well. When it breaks above its 200-day moving average, that's the red line, it tends to go higher. When it trades below its 200-day moving average, when it trades below its 200-day moving average, then it tends to be trading lower until it then trades back above it. The 200-day moving average is this red line. Okay. So are there any more questions? I want to take another couple of minutes here. If there are any more questions that you might have for this, are there any specific stocks you want to look at to trade, to just explain to you whether it may be a good stock or a bad stock? Let's do this for another 2 or 3 minutes, and then I'm sure you also want to start going into your weekend. So again, a lot of the good stocks here, in my opinion, are the stocks like Apple, the big, large technology stocks, the banking stocks. I think are very good. But again, I think one of the most important things to understand is that stocks have personalities, and every stock trades a little bit differently. But as long as you find stocks with good liquidity, with good orderly news flow, stocks that are not involved in any major lawsuits or any major takeovers or acquisitions, those tend to be, for the most part, good stocks. So again, that comes down to stocks like Apple, Google, a lot of the technology stocks, Amazon.com, the Bank of Americas. There's so many stocks in the U.S. stock market. It's very difficult to list them all in one breath, but there are many. Okay, so ABC wants to know about exchange traded funds on commodities. I think and again, we're going to talk about this in the future webinars. But what I will tell you is this: I personally trade trade like the GLD quite a bit. This is an exchange traded fund on the price of gold. I personally believe that commodities are difficult to trade, more difficult to trade than stocks, and that includes the exchange traded funds. Every once in a while, I do trades. They have lots of liquidity. Okay, so the way I trade these exchange traded funds is that I'm very selective in the trading. Okay, so when I see a major trend break, maybe I'll do a trade to the downside. For example, I shorted the gold here when it gave us a strong, what I call bearish reversal, which is something we'll talk about in a future webinar in technical analysis. But I believe these ETFs are good, but from a trading perspective, commodities, in my opinion, are more difficult to trade than stocks, or particularly more difficult to trade than U.S. stocks. So again, that doesn't mean there's no trades. I just think the trades are a little bit fewer to come by. So, okay. All right. Well, listen, everyone. Thank you so much for your attention. I hope this was helpful. I hope you will join us again next Wednesday in the next webinar. And if you have any suggestions for topics you would like to cover in the webinar, just send an email to the good people at Roboforex. And with that, I wish you a good weekend. Take care.